Welcome to the Unconventional Investor Podcast. I'm your host, Michelle Moses, certified financial planner, licensed realtor, and founder of Me Financial. If you're an accredited investor feeling overwhelmed by managing your portfolio and looking for alternative investment strategies that go beyond the traditional stock market, you're in the right place. Let's head into today's episode so you can start taking control of your financial future. Hello, everyone, and welcome to the podcast. Thank you so much for listening. I am Michelle Moses, your host, and we are going to be talking to Becknell Industries today about their new real estate investment trust that they have just launched. And normally I would not have a new fund on the show, but Becknell's been around for a long time, has a very good track record. And if you've been listening to the show, you know that I really like boring investments. And I mean boring as in stuff that makes your life run every single day. You know, we're talking about equipment leasing and industrial buildings and all of those sorts of things. And to talk about this, I have Clay Thelen, who is the Chief Financial Officer of Becknell, and he has extensive experiences in the areas of acquisition, capital markets, accounting, and financial planning and analysis. And he is one of the people leading the launch of Becknell's new fund. Welcome, Clay. Thank you so much for being on.
Thanks for having me on, Michelle. Appreciate it.
Yeah, Clay has, if you go on their website, you guys, you'll see that Clay has many, many degrees in accounting. So yeah, I think he's definitely qualified to do his job. So I want to call him to do my taxes.
Well, Michelle, you introduced me as a lot of background in accounting and I think boring to start.
Yeah, so and boring. Okay. Yes, but that's what makes the world go round, right?
That's
the boring is what makes money. And I think that, as I was saying before the show, I was saying how I just think that people get too wrapped up in like, oh, I want to go invest in SpaceX, or I want to invest in this restaurant that's opening down the street. And those are not the things that continually make money. The things that continually make money are the things that I find that investors don't find as exciting, you know, like the new people going into alternatives.
I agree. And I think you're kind of hitting on something that you mentioned, Becknell and our history. That's kind of been a core principle of ours for a long time, right? In terms of focus on the long term, low leverage, and specifically focused on industrial real estate.
Yeah, so let's talk about what Becknell does, because I mean, It's really fascinating to me how you guys build these buildings, but you have they're already sold basically before you're building them. So kind of explain what Becknell is doing, and then we'll kind of get into why you have launched this fund and you know that you're expanding into the retail market.
Yeah, happy to. So a little bit of background on Becknell to start. So Becknell was founded in 1990. So 36 years now of experience, focused solely on industrial real estate. And when I say industrial real estate, it's really the full cycle investment in industrial real estate. So it's the development of industrial real estate assets. It's the general contracting during the construction of those assets. And then importantly, it's the ownership and long-term asset management related to the assets as well. And hopefully we talk a little bit more about it, but that full vertical integration has been a big differentiator for us, you know, going back since we were founded. So,
and when you're talking about industrial buildings, can you give us some examples of some of the companies that would be occupying some of these?
Sure. So when we say industrial, we're really focused on storage, right? Warehousing, some light manufacturing uses as well. We'll talk a little bit about some assets that are coming into the fund, but a lot of times in an asset that's coming into the fund, one of our initial assets, it's manufacturing adjacent is kind of how we describe it in a lot of ways, in terms of a distribution facility, maybe located right next to a manufacturing facility, all the way up to bulk distribution, of course, Amazon assets and everything that, you know, we've all read about or experienced in terms of e-commerce distribution and supply chains. So really distribution and some light manufacturing is kind of what we refer to when we say industrial.
Okay. And so you guys have been operating and then you hold on to the asset, correct? It's not just building it and then selling it like a lot of people would do.
That's exactly right. Yep.
Yeah. And so you hold on to them. And so can you explain the process of holding on to it? Because I think a lot of people understand that, we build it and then we sell it to the company. And then what that process is that you go through.
Yeah. So, and this really goes back to our founding, our founders, right? The business was built really by Dan Harrington and Fritz Hartrich, our two founders, and it started with one Nabisco build-a-suit. And when we say a build-a-suit is a custom-built asset for a tenant. And so right from the start, we know we're building the asset for that tenant's specific needs. And at the end of construction, we're going to lease it to the tenant. We'll still own the asset, but we will then lease it to that tenant for a period of 10, 15, sometimes even 20 years. So we're entering into a long-term lease with the tenant. And
you already have the lease agreement when you're building it, right?
That's exactly right. With a build-a-suit, we do. Yep. Mm-hmm. And that long-term ownership for us has always been a huge focus, not only being the developer and general contractor, but the asset manager and owner as well. And as you can imagine, working with a tenant, a potential tenant on a build-a-suit, a real differentiator is to be able to go to them and say, hey, not only are we going to develop and build it, but we're going to be the same group that's asset managing and the same group you can call while you're occupying the space. And that's
do you have a separate entity that's doing the management of the asset, the lease management?
Yes, we have a services group that handles the asset management. Yep, we have
That's what I meant. Yeah, yeah, another group.
So, and you're kind of hitting on something really important, Michelle. That's all in-house, right? And so we have 91 employees today, or 91 team members today in 5 offices, and that's all in-house. So the design of the building, the management of the building, those are all Becknell team members that are handling that.
Okay. And so you guys have seen a lot of success over the years, and now you are wanting to have your first fund. And so can you explain the rationale about wanting to branch out into the retail market?
Sure. Yeah. So throughout our history, we've developed or acquired 225 assets, about $4 billion of total value in terms of real estate. Our focus throughout our history has always been focused on the long term in delivering to our tenants and our capital partners. Right. Our entry and the launch of Becknell Industrial Income Trust we plan to continue that same long term view, that same long term vision, and it's really a continuation of kind of what we were just talking about in terms of Becknell and BIT investors really partnering in that value of delivering a full solution to build-a-suit tenants, right? And being able to do that with Becknell taking on the development risk for assets, right? So if we take an example, the first initial asset that we've identified for Becknell Industrial Income Trust is a facility for Abbott Labs, right? Abbott Labs, A-rated credit, right? Fantastic company. This asset we've built on our balance sheet. We built the asset, and now they will start to occupy the asset, and that lease will commence. At lease commencement is when the BIT investors are then able to participate and invest kind of shoulder to shoulder with Becknell in the long-term income generation from that lease. And so,
right. So their dividend, dividend payment is basically is the lease payment that you're receiving.
That's exactly right. And an important point, our distribution is purely based on net operating income and the income we're receiving from that lease. That's right. The rent we're collecting.
Okay. And I want to point out here, we're going to pivot just a little bit, but I really like how much you guys have the owners in the company. I mean, the owners and their families and the company they have skin in the game. And you guys, if you've been listening for a while, this is uber important to me anyway, for a good investment. And can we talk a little bit about that? Because you guys have a lot to even get this started. And historically, you've had a lot of skin in the game, and then it's no different with this fund.
That's right. Exactly right. So I mentioned our founders. We're BIT, as we call it, Becknell Industrial Income Trust, is largely a continuation of our strategy we've had for 35, 36 years now. We will maintain a minimum of 10% investment in BIT, right alongside BIT investors. Again, it's really a continuation of kind of our core belief in the long-term value created in owning this real estate, and with, again, the best of the best in terms of tenants.
Yeah, well, and it makes sense too, because it just kind of frees up some cash flow so that you can go do more deals. And you guys have buildings all over the United States. I mean, that's
exactly right. It frees up the balance sheet for us to go and do more development, right? And importantly, it provides, if you kind of think about it, and we always think about things in terms of the investor, the BIT investor, which I am one, right? The BIT investor is providing a tremendous amount of value here, because in order to have exposure, again, to the best of the best in terms of tenants, right? It's this full cycle, the ability to deliver on the full cycle, the full life cycle of the asset. And it's a real differentiator to be able to do that. And through doing that, the BIT investor is able to have exposure to, again, the best of the best in terms of tenants, brand new buildings that we've just completed, right? So new assets, long-term leases that have just commenced, and all in a low leverage capital structure, right? We're focused on low leverage, built for the long term, targeting 40% loan to value from a capital structure perspective.
Yeah, and I think that's really important that it's a new building, because you go to these, and I've looked at a lot of deals, and most of these industrial, like I've never had another industrial REIT on the show, honestly, because they don't really stand out, and I don't. And I say boring in a bad way. I mean, there's just nothing that stands out to them about it. And you guys have big names. You've been doing it for years. You have the connections. You've got a lot of skin in the game. And so you have a lot that makes you stand out from the crowd. And you guys, I mean, you need to understand, like, sometimes you see these deals and I get these emails and they want you to invest, and they're just trying to find industrial deals like here and there, hey, we're just looking at, and there's no like set structure. I'm sure, Clay, you have some things to say about this.
Yeah, by the way, I think it's a really important point, Michelle. I think it's really, candidly, I think it'd be really hard to sit and have that exact conversation that you just highlighted, right? And say, hey, we're looking to raise capital and go buy assets that are available on the market in a widely brokered or marketed process, right?
Yeah, and what they're selling is basically that they know how to do due diligence and they know how to look at a bunch of deals, and like that's what they're selling, in my opinion.
And I think that's really hard too, because then you're competing in a very, I'll say, active market with some big other groups with large amounts of capital and really low costs of capital too. And again, I think the key differentiator for us is what you highlighted, right? Being able to offer our build-to-suit platform, right? And those relationships we've built over 35 plus years now, and then the long-term income that's generated once these assets are complete. And candidly, it's exposure to assets that, we're active and we look for acquisitions too, from time to time. And it's very, very difficult, I will say. And you just don't see an asset that I just described, right? A long-term asset to an investment grade quality type of tenant in a brand new building. Right, those assets are very rare.
Yeah, and if it's a used building, whatever, a used building and an aging building, is that you're going to have maybe some capital calls, or there's just a lot more that goes into it. And if you're having to retrofit it to a new business, and there's just a lot that goes in.
There's tenant improvements, there's CapEx, exactly, where. Within BIT, these are new leases, right? and long-term leases. Important.
Yeah, with large companies.
With large companies. And by the way, I think that's an important point too, Michelle, in that if you're an income fund, which we are, one of our core beliefs is you got to feel really comfortable with these sources of that income, right?
Mm-hmm.
And making sure not only are we doing a detailed underwriting of the real estate, right, and being a real estate investor, but the credit as well, right? In entering into a long-term agreement, you have to feel really comfortable with the credit. And again, that's where dealing with, working with, partnering with, the best of the best in terms of Fortune 500, Fortune 1000 companies with investment grade quality or equivalent level balance sheets is really important.
And you don't have a whole lot of issues with defaults or people moving, breaking these leases.
No, in fact, it's really incredible. When you look at a typical lease, right, in terms of being 12 years to, the asset I just mentioned, right, a 13-year lease with Abbott Laboratories, there's extension options available on that too at the end of that lease, right? And in the overwhelming majority of the time, those extensions are typically exercised by tenants.
Oh, really? Okay. I mean, I would think so if the building's built for them.
The building's built, exactly. And, we have a phrase that's really meaningful to us is mission critical, right? Mission critical locations. And I mentioned kind of manufacturing adjacent locations. These are critical locations, oftentimes specific to these businesses, right? Adjacent to a manufacturing facility, right? That's where they're going to ship out of ultimately, where they're going to distribute product. So they're critical locations, and
and for them to change that would just be a Herculean effort.
That's right.
Tons of money. I mean,
that's right.
We'll be honest.
Exactly right. And, they're making a huge investment in entering into the build-to-suit, and that's an investment in the building, and obviously we're there for the long term for them as well in terms of building it and managing.
Okay, well, let's talk about the investment. So you did touch on that this is an income fund. So if you guys have some bonds, or I would say a lot of people are not that excited about bonds right now. We're all chasing a return, and we've had many, many years of an up market, and there's a lot of debt floating around in the government, and we don't need to get into all of that, but maybe that's for a whole nother episode. But I think having a debt instrument like this to produce a regular income, especially when you're starting to go into retirement. So if you guys listen to my podcast about the buckets of money, what you're trying to do is before you go into retirement, you're trying to figure out exactly how much you're going to make every single month or quarter, or however your distributions are sent. But these are the types of things that you can kind of transition into to either replace your bond portfolio, or as you're going into retirement, to know exactly, what you're going to make on a monthly basis, so that you're not just left to like, oh, I got this portfolio in the stock market. People feel a lot better knowing how much they're going to bring in, and then they can make up just a little bit of the difference with the money in the stock market. But stuff like this really helps people. So let's kind of transition into the investment itself and what the offering is, and the target return.
Sure.
So this is a real estate investment trust, you guys, which means you would get a 1099 and not a K1, which is always good for your taxes and not having to wait. And your distributions are monthly. And so you want to talk about a little bit about the distributions?
Sure. That's right. Monthly distributions in a 5% distribution rate, a 5% annual distribution.
But they get extra if they're an early investor, right?
That's right. Early investor incentive.
I'm like super salesy here. Hey.
That's right. We did. So in launching in last year, we introduced an early investor incentive plan that provides investors that invest in the first year, which, kind of through the fourth quarter of 2026, an incentive to invest, right? We know we're new to the space, and that's staggered, but ultimately, kind of that third tier is if you hold the investment for a period over 4 years, it's a 5% increase, or a 5% increase to your initial investment.
Right. So you need to hold it for 5 years, or did you say 3 years or 5 years?
Yeah. So you have to hold it for over 3 years.
Okay. So you got to hold it for 3 years and you get a 5% bonus incentive
That's
bonus.
Right. That's
okay.
Right.
All right. I know the 3 and the 5 going back and forth here.
Yeah. I know. That's okay.
Okay. And then in looking at your fund, none of the fees were over and above what any other REITs were. They were pretty standard, just so that all the listeners know. There is nothing that was unusual. Like sometimes, some people throw in all these different fees. On this, I felt like it was fair, and it is pretty standard for, a bond replacement to earn 5% distribution. And the minimum investment is $25,000, which I think makes it more accessible to a lot of others versus $50,000. And you do have to be an accredited investor, you guys, in order to invest in this. Am I missing anything that you want to tout about the investment itself?
No, that's right. And, I think it's important to highlight too. You mentioned, kind of a comparison, Michelle, to fixed income, which is pretty comparable to fixed income ultimately. But, at the end of the day, it's an equity investment in real estate, right? And so in addition to a distribution, right, the 5% distribution we highlighted, our focus, if I just kind of think of the focus for BIT, it's number one, maintain and preserve shareholder capital, right? Number two, provide and maintain a reliable distribution. And number three, realize appreciation in our stabilized asset value. And so it is ownership in the equity of industrial real estate. And over time, we're long-term believers in the value of real estate, specifically industrial.
Well, and that's important too, because it makes it safer, obviously, because if you're just investing in debt, that can go away real quick when someone declares bankruptcy or something. But if you actually are an owner of equity in the building, we all know, like you guys, you need to pretend like you bought, a commercial building of yourself, you buying a part of it. And the way I equate it now is things are just getting so expensive that we almost all need to pool our money together to buy some things. It's like private equity is getting into buying marinas. And I mean, they're buying a lot of stuff, and it's these funds. A lot of them are buying things because they're just getting, it's getting really expensive to be able to purchase and maintain and do all of these things. And so we've got to invest in some different ways. So, I like your company. And I think, as I said, I haven't had any other industrial REITs on here because they haven't really stood out, but you guys really stand out with the way that you run your company and have your, the families involved and invested, and your track record, frankly. So, I'm excited to see how your REIT does.
Thanks, Michelle.
Yeah. Am I missing anything? Any big things you really wanted to talk about? This is Clay's first podcast, so I want to make it a good experience.
That's right. Look, I think maybe one thing to highlight would just be, I do think it's a really attractive time to invest in industrial real estate specifically. There's been a significant reduction in new supply as it relates to industrial real estate. So there's a reduction in the supply being built, the number of buildings being built today. And then demand, we talked about it a little bit, Michelle, in terms of e-commerce demand is continuing to increase. It's 17% of retail sales today. And if you go back just over 10 years, it was roughly 5% of sales, right? And that requires more complex and a change in distribution networks, which requires more industrial space. And then maybe one other point is onshoring and reshoring of manufacturing. And we talked a little bit about industrial, in addition to having some light manufacturing, being manufacturing adjacent. Last week took a count or looked, it was, I think, $2.5 trillion of manufacturing was announced. New manufacturing construction was announced in the U.S. in 2025. And again, just further goes to the potential need and demand for
why has the supply why has it been constrained so much? Like, why is there such demand? They just haven't been building buildings?
Yeah, the industry's gone through a time of absorbing supply, obviously with kind of coming out of the pandemic. The industry as a whole is in a period now of absorbing supply that's been in the market, right? And a lot of that was built on a speculative basis. So not what we talked about where, hey, we're going to build and we're going to have a tenant and we're going to have a lease, but building a building and then leasing it post completion, right? And so there's been a lot of absorption happening in the market, and it's a market by market kind of analysis, but there's been a lot of absorption out there that has needed to take place and is taking place. But the demand in terms of tailwinds, really both from e-commerce and manufacturing, continue to be really significant.
Yeah, that makes sense. Okay. Well, again, I think it's a solid investment, and I'm glad you came across my way.
Yeah, thank you.
Thank you for being on. And you guys, I'll have all of the information about the Becknell Industrial Income Trust in the show notes, ways to get in contact. You can also contact me to, help you in ways how to custodian this in a way that's not going to break the bank. And there are some other details, about loans and things like that we're kind of, if you wanted to get in more detail about that, you could obviously call Becknell, or you could call me and we could talk about it. And I guess that's it. Clay, thank you so much for being on. I really appreciate your time and explaining your investment.
Thanks, Michelle. Appreciate you having me on.
Yeah. And you guys, thank you so much for listening. I appreciate it. And if you have any topics that you want me to cover, and I think in the future, what I'd like to do is I want to have some people on that need financial advice. I would like to help them with whatever questions that they have. So if you have someone that is needing some advice about that, I'm not going to charge them. I just need some podcast content. I really want to start teaching people how they would replace some of their I guess do a lot of their stuff, all the assets, but maybe replace some of their stock market assets with some of these alternatives, because, when you do diversify into multiple different assets, it helps you sleep at night. It helps your worry go down. That's all I can say. Rather than having it all in one big account and maybe a couple mutual funds, I have found that when you have a lot of these exciting different investments, it really helps people and it gets people excited about their money. So let me know if you have any feedback on that. And thank you so much for listening. I hope you guys all have a wonderful day. Thank you for listening to the Unconventional Investor Podcast. I hope you feel more confident in how you can grow your wealth using the strategies I shared in this episode. If you're ready to take the next step in diversifying your portfolio outside the stock market with alternative investments, head to mefinancial.net/contact us to book a 15-minute consult call with me. Let's discuss how we can work together to achieve your financial goals. Until then, I'll see you on the next episode.